Another corporate voice joining us right now. Sanjay Jalona, the CEO and MD at L&T Infotech, joins in the show. Sanjay, hi, morning. You know, the industry-leading growth in a seasonally soft quarter with very steady margins. How is it that you would sum up the quarter gone by?
When you talk about what's happening in the marketplace and the opportunity there lies in, we are of strong belief that if there is a story to be told, if there is a value that can be created for the customer, there is an opportunity for IT services companies to make money. In terms of talent and subcons, etc., actually our subcons cost have come down on quarter as we ramped up, and a lot of ramping up actually happened at offshore. That is where you will see our on-site ratios also reducing a little bit. So these are some of the things which are important to note when you look at LTI results on a traditionally weaker quarter.
All verticals except the BFS and other grew faster than what the company had anticipated. Do you see that same kind of momentum carrying on in Q4 as well?
See, I think the good thing about this quarter was every vertical fired. But you know, this doesn't happen every 4 quarters. If you would have noticed, I have talked about softness in insurance in the last quarter, and I'm very happy to see that the team has really come up very strongly. So it'll not be right for me to say that same momentum of all verticals growing at all the time will work. But traditionally, what we need to do is to look at year-on-year growth, and that is where you will see that every vertical is actually nearly doing double-digit growth, and that's very important for a company to grow.
All right. What about inorganic opportunities you're assessing? Interested in NIIT Tech as per reports? Would you have anything to say on that front?
So look, we announced one inorganic opportunity, very small, but a boutique specialized company. In terms of other acquisition opportunities, we are always looking at opportunities globally at any given point of time. But we don't comment on any market speculations. Why these 2 companies that you mentioned? We look at any company that comes in the marketplace if it is going to bring value to our customers.
You know, Digit accounts for how much of your business currently? It'd be interesting to understand that. And what run rate are you seeing here? Are the new deal wins largely on the digital side?
Now, our percentage of digital business is 37. It's up 30% on a year-on-year basis, and that's the reason why we are growing. Customers are not spending necessarily on the older technologies. Customers, by and large, spending on the newer technologies with the customer. We are probably on the other point. We are probably the only company which does not actually give the number of renewal amounts, right? The renewal contracts. When we even announce large deals, we actually talk about net new TCV won. So the $600 million worth of net new TCV won in the last 10 quarters is what we have announced. And every quarter when we announced, we only announced net new TCV.
Okay, good to have you, and thanks so much for taking the time out and speaking with us post